Well, let's just turn our attention back to the budget, which is in front of us, 3 days away. Samir Arora is with us. He's founder, fund manager at Helios Capital. Samir, good morning. Good to have you with us here. Thanks for joining us. Samir, of course, is also, one of the CNBC TV18 budget editors. So, you'll hear from him before the budget, on the day of the budget, and, of course, some analysis post the budget on that Monday, as well, coming Monday as well. Samir, good to have you with us here. Just a quick headline kind of view on, this is, as many have said, one of the budgets where there's no noise about the budget. 3 days out, absolutely quiet. Any expectations at a headline level, and then we'll get into some specifics.
No expectations. Maybe we keep hearing that they may do something on long-term capital gains for some FIIs, which may be defined as some endowments or universities or long-term, some X thing. So broadly will not matter to rest of the world, but anything that helps somebody helps everybody in that sense. But beyond that, I also have low expectations other than the normal stress, not stress that way stress, but normal stressing on capex and keeping fiscal discipline and all that, but not something in mostly market moving.
Samir, I remember when we spoke, when this LTCG thing happened, right? I think this was back in 2018. I remember you kind of started sounding very, very significantly disappointed when it had happened in terms of how this would have an impact over it was not just about then and there, but over the long run. And I think it has indeed played out in that sense, Samir. How should, if this is, I guess this is now too late to ask you what they should do, the government should do, but
I don't say what they should do because my game is to see what they will do. So what happens is if I keep thinking myself that it's so logical that long-term capital gains should be reduced, then I start believing it myself. And then I get carried away and saying that it's so obvious that this is what is required or it is so across the world, the same thing. So mostly my thinking is they will not do it. I keep arguing on Twitter for the sake of intellectual discussion that why yesterday's discussion on your channel with Lata and all was absolutely flawed. To say that because US has this and because some other country has it, India should have.
Samir, for the purpose of, and I think I was coming to that, right? Anant Narayan has written a piece as well. He was part of that program that you're referring to. Why is that flawed? What Anant is arguing is taxation should be residence-based, like it is everywhere else in the world.
Oh, I'm not about FI thing. FI, of course, should not be here. There should be no tax in India. That is so obvious.
Then
I was talking about that debt and equity in India for Indian resident investors should be same or similar. If you want to say it that the equity guys are okay at 12.5 and over time you'll bring debt guys down to 20 and 15 or whatever, not to make it look that one set of people is arguing, if they are, that the equity tax rate for Indian investors should be increased to what they are paying on debt. Because I'm saying that is wrong because the debt guys, when they are earning that interest and on that they are paying tax, somebody else is offsetting that interest from his income and is paying less tax. It's not the same in equities where if I buy somebody's stock at 100 and it goes to 200 and I sell it, the guy who sold it to me at 100 can keep saying, oh my God, I made an opportunity loss. But he does not go and take a tax credit for it. And therefore, one side pays and the other side does not get an offset. But when you are doing basically tax on interest, one guy is earning the interest and is paying tax. But on the other hand, the guy who paid that interest is reducing his tax. So therefore, effectively interest is a zero-sum game. And therefore, one guy wins and one guy loses. Whereas in capital markets or in equity, particularly cash equity markets, there is no offset. So if you broadly look at it, the equity guys might be paying more tax than what it visibly looks when compared to debt. And secondly, we can't conveniently leave out STT from all calculations and say because the US and all don't have. So if we broadly, I don't know exactly what is the ratio, but if STT collections are, let us say, I have no idea, equal to capital gains tax, then broadly we should look at it that the capital gains tax in India is not 12 and a half, but in aggregate 25%, if it is double. I mean, if it is equal, because STT doesn't come into any of these discussions. But if you're saying for FIIs, I've been saying from day one that there should be no tax in India, just like Indians are not paying any tax on all the investments that they are making is in US and everywhere else. And they are being taxed in their home country, which is India.
Yeah, but if you bring,
but I don't expect any of this. I don't expect
you're
any
saying
of this
you're saying no real tangible high conviction expectations from the budget. Let me put it that way. I'm paraphrasing
No,
you.
I'm saying I can dream in my mind and hope in my mind that they do some of this.
Yeah.
But we are not acting on that and not believing also because these things. The fact is practically the rates were just increased last year. So it is not easy for anybody to change them back. Maybe you can do 2.5%, 5%, even that will be helpful. So basically the thumb rule is if you reduce, say from 12.5 to 7.5, and you can say it's temporary for 5 years, market will go up 4-5% because you are basically adjusting for the lower tax. And so the post-tax returns will go up and that'll get you'll get 4-5% pop, and that will change sentiment. It'll show that the government and the system accepts these things, even if they are for 5-year period or something. And you can change the sentiment. Otherwise, sentiment will need to be changed with A, passage of time, B, this EU deal, then US deal, then general things as they improve and earnings improve. So that'll take 6-9 months. That's how you can do one or the other.
Yeah, okay. That clarifies things. I can go on about that debt and equity versus debt, but I think that
First of all, we have suddenly,
debated that yesterday.
Our thing is, we normally go from one end to the other in terms of celebration. So just to tell you, at the end of 2007, we thought we were getting so much FII flows that we stopped FII flows, if you remember.
Yes.
And we used to have capacity. Now we are feeling that there is so much equity flows. Actually, it is not so much equity flows. It is required because it's replacing FDI also a little bit. And anyway, who in the world feels bad that there is equity flows? And then they will suddenly say the valuations are high. Which valuation is high in the sense? Of course, they may be higher. But they were like this premium to other markets. The absolute P's in the 18 to 22 range have been there forever. So just because the market fell, we are trying to justify that this must be because of high valuation, but it didn't fall in 23 and 24 and whatever 21 and last year and 7, and they were the same valuations. So I don't believe this. That's why I recommend everybody to read the halo effect. That if the price is down, you make some logic for why that price is down. If the price of a stock is up and is up 20% per annum for 5 years, can anybody say that this is bad management? No, it is the best management. They have great plans. That is why so it's everything is.
Samir, one argument against long-term for FPIs, right? Because the problem is rupee. I mean, it's not a BOP problem. It's basically the portfolio flows which is hurting. FI sales which are hurting, and that's showing up in the currency, etc. So you need dollars in that sense. Would it be a hard sell if they made taxation residence-based? I mean, I'm not saying it'll happen, but you think it'll be tough to say?
Because
but I'm saying people will say, well, it's unfair. You're giving FIs for easy exit. Local investors are being taxed.
They are not giving any extra benefit to FPI because when the Indian guys, and now you see everywhere that because of Gift City and all, that Indians are investing in US mostly, let's say, and everywhere else, they are not paying any tax there. That tax is being collected by Indian government. So effectively the US government is leaving that tax and saying, no, you can pay it in your own country. So it is not this thing, but I'm saying it becomes difficult once you have set it. Therefore, I've been saying reduce it for everybody. Don't do it only for FIs. Just reduce for everybody to 7.5 or ideally to 0. And you change STT a little bit because on the other hand, separately, we keep saying, although we own all these exchange talks that the volumes are too high, speculation is too high. Okay, change one, but of course, on Twitter I'll be attacked by all these traders. But broadly adjust if you so want, or let it be for 5-7 years and then decide after that.
Yeah.
Because we need something instantly. By the way, separately, because now we have to do a lot of calls with our customers, our investors, because of currency fall and all. It is a bit embarrassing the way the currency is falling every day when the dollar has depreciated by some 2.5% in this month, and against that the FIs have lost 2% on that. So it's a 4-5% difference in basically 2 weeks. So all these things have to be handled. If tax is there, you're paying tax on INR returns, and then the euro investor has lost 20% in 1 year
Yeah.
on just the currency. That is why best is, since everything can't be controlled, at least tax can be equalized. I think anyway it's too late. It must have been
It's too late.
printed by now, the budget, so let's not.
Yeah, yeah. Samir, I had more questions, but we've been squeezed in because of that unfortunate news which has come through. But really appreciate you coming on. Thank you for joining us, and we'll see you on the day of the budget, in terms of what really comes up. But as Samir said, no real tangible expectations in this one. A lot can be done, should be done, but of course, don't keep hopes too high, as he put it.